we go.
Hello everyone. I wanted to go over the rules for the A plus trade because we have some new people in the room and I just want to make things easier for everybody. Let me grab the rules here and drag them on. It's always best. And I just made these up. Usually I just talk them, but I figure we need to have them where we can see them. Hopefully this is big enough so that you can read them. So it's money on the floor, currency trader. It's the rules for the A plus entry. Now on the entry you need all of these. On the exit you only need one. So we'll go over that. So let me just pull this up out of the way. Actually we can leave it there. Here's a good entry right here. So it says we need to have an A plus arrow appears. That would be this white arrow. We have it also in the RSI, the double RSI. The reason why, sometimes off the chart you don't see the arrows and I've missed trades. So I got mad and I put the arrow in the RSI. This way I do not miss them. So once you got the arrow, that means there's a possible trade. Now you can either take the trade when it crosses the 50 line, or you can take it early, which is not a problem. The main thing we want to look at, once we got the arrow, do we have structure? I mean, that's the main thing we should be looking at. So we do have structure, and before you even trade, you should always, do your walkthrough on your analysis. Maybe go up to the day chart, see what you think, walk it down all the way down to the 15-minute, and then as long as you feel that you're looking for a buy trade at this area, then this arrow appears. We have structure. That would be the next thing. And we want to take the arrow away from structure. So this one is going away from structure. So that would be what we're looking for. This would be the number one rule. The second rule, we want to look and make sure everything is the right color. See, we have a green candle, green RSI, green RSI. The two indicators at the bottom for our trend are green. Now this one is for the 15-minute that we're on. This one is for a 4-hour chart. So we know our higher time frame is looking for buys right now. It's still going up. The only thing we do not have is we have the half trend is still red. Now, it doesn't have to be green. I would recommend it to be green, but you at least want to see the candles going above the half trend. See how they're above and they stayed above this whole time? Right there it dropped through, and that was a good sign possibly to get out. Possibly. It's just a sideways move that continued. So what we had is we had an impulse, a correction, another impulse. So what happens is, we're going to go ahead and see the arrow. We're going to make sure we have structure. We're going in the right direction. We're going to see everything green, and if the half trend, or at least if we're above it, and I guarantee once the candle went above the 50 moving average, the half trend was green. So we're looking for that somewhere in there. We're looking for a safe trade. Your stop would go down below this arrow right here at the time. You could put it below the lowest low, which is right here, this wick, but same thing, I would just put it down here below because this is safety. We're not really utilizing the stop. We're using the stop if the market turns on us and collapses and something happened that we don't know. Maybe we didn't see a news announcement, maybe a country went to war that we're trading. Things can happen, and you got to have a stop to save you just in case this thing drops 1,000 pips. Now it could still jump that, and that's something you have to be careful of. So the main rules we're looking for is looking for the arrow, looking for everything to be green. Once we know we have that, now we're okay to buy the trade. And we've already done our analysis. We can enter the trade. Now, what would be the rules for exiting? Well, the opposite arrow is number one, and we don't have that yet. If you would have got in here, you would still be in the trade. You haven't had that. What would be the second one? Let's see. Oh, one of the two bottom indicators changed color. Yeah, that would definitely be a big one. And that would be this right over here. Right here we have it went red, so we would exit this time, would have got out at this point. That would have been very good. Now, there's another little trick too, this white square. This means that we're running into structure. Structure hasn't formed yet, but it says it's starting to see structure here. That's also a good indication to exit at, but you don't have to exit at that point. But if you're in a lot of money and that white square pops up, I would definitely get out. So, but you don't have to. It's not mandatory. These three things are mandatory. So when the two bottom indicators, one of them turn the opposite color, you want to get out. If you get the opposite arrow, and what about the opposite reversal dot? So right now, we're starting out with green, everything green. So as we're going up, if we get to that red dot, that is a good sign to get out right there. So I would definitely be exiting. But you would have probably already exited over here when this changed red. But these are the three rules. Any one of these happens, you exit the trade. and that would be very good. Now, let's say you were in the trade and you knew if the candle went underneath the half trend, that maybe you shouldn't be in the trade anymore. Maybe you've already made $1,000, you don't want to give it back. You could exit that trade. Now, if we get another arrow and everything is green again, you can re-enter the trade if you'd like. So, I mean, you could play it two different ways. But these three are mandatory. You get one of these three, you need to exit the trade now. Because we're here to keep the money, not give it away. It's hard enough to make the money, but sometimes we get stubborn. I know I do. I'm speaking for myself. I think I see that we're turning around. We're doing a reversal, or we're continuing. We're doing something other than what the chart's telling me, and then I start losing money. And that's something we don't want. So if you stick to these rules, you will make money. Now, as far as re-entry rules, if you have a pullback, because this is just a pullback, so we have red candles, but nothing here is red. Now, sometimes you'll get where it's red here and green here, but if you get any of these, you have to exit the trade. But let's say you don't get any of these, and you do get, well, this would still be, you would exit anyway on the red. So what happens is you would exit here. So if you're in the green trade at this point over here in this area, you would exit when that happened. Now, once this ended, the pullback is done, you can still continue the trade again. So this would be a whole nother trade. And we can do reversal trades because we know, but they are not in this rule. This rule is about the A+ trade, the most powerful trade. So right now, that's all we're talking about. We do the reversal trade, but that will have its own set of rules, and we'll have to write that up. So right now, this is just for the money maker, the A+ trade, which is right here. When you see this pattern right here, I mean, this is the money maker. I was trying to get this to go away, but it doesn't want to help me. Let me just close it. So if we see here, I mean, this is our money maker right there. This is our bread and butter trade. Structure, boom, impulse, correction, impulse, we're done. You should have made enough money with that you were happy. Now, we can do the reversal trade, and that's fine, but it's going to have different rules. Let me just look at that real quick, just so you guys understand, since I got everybody here. We have a triangle here. This is our A+ trade. So we have a squish on a triangle. The A+ trade is right here. We did have an arrow back here, but it did not quite set up yet until right about here. Now, I like to wait when you see it like this and it's consolidated. I like to see it break the 50 moving average. This is the 50, this is the money line, and as soon as it breaks it, I'm in because we're going. I want to get in soon. I might even get in here, but if it breaks that structure, I'm out. I'm willing to lose a little bit to make a lot, and that's what it's all about. This would be probably a 5-to-1 risk reward, or at least a 3-to-1, so that would have been good. But the main thing is that you know you have a triangle, you have an explosion. Get that sign out of there. We have an explosion, and then once one thing changes, you get out. What was it? Was the opposite arrow. Could have been the red, the two indicators at the bottom, one of them changed, or the reversal dot, which didn't happen until later. So that's how we run it. And then after that, this move is our signature move, which is back down to the 50 line, which is reversal trade, and then back down to structure. So we do trade this, but this is not the A+ trade. If you're a new trader, you should stick to just the A+ trade. But if you're seasoned and you feel you want to try the reversal trade, and we're doing it in the room and you're doing it with us, that's the safest place, because as soon as I see something gone wrong, we can get out, and that's what it's all about. So at least in the room, I would recommend you could try it, but always with the reversals, we should always do it smaller, because what happens is the market moves up fast, but it doesn't move up fast. It moves, actually, we make money slow in the market, and that's the problem. But when you lose it fast. So I noticed, you always notice that. Takes all day long to make good money, but zoom, right away it's taking part of it back. So, and that's what the market does. So if you're going to do reversal, you want to be careful because the trend is up. We can see the bottom when the trend is up. When this ends, it's going to start flying up. So if you didn't get out quick enough, you're going to lose money on here. That's why sometimes it's best not to even do reversal trades, because we don't know how big this is. We can see that this was a good one, but was that a good one? No, it only went to here and it turned right back up. So this was a loser. You would have got in, you said, oh man, I'm getting out, and then it set up again, then it went down. So sometimes it's best to stay away from that, because if you would have taken the one right here, you would have been in the trend, you would have been in the trend, you would have been in the trend, and those were the safest trades, and that's what it's all about. All right, everybody, thank you. Let's make money in the markets, and we'll talk to you guys all soon. Okay, bye-bye.